Hi everyone, Mark Anderson here, Home Loan Officer at Carrollton Bank in St. Louis, Missouri, presenting episode 9 of my series, The 5-Minute Mortgage Class. Today's subject, how VA mortgages are almost always the best option if you qualify. If you're a veteran, an active duty service member, or a reservist, you are typically going to have access to a benefit through the VA that gives you this mortgage program as part of the options that you can take a look at when you buy a home. I have found over the years from talking to people about this program that when veterans have gone mortgage shopping, there are some loan officers and companies that point them in the direction of other mortgage programs, including conventional and FHA, and in fact steer them away from using their VA mortgage benefit. I think that in the vast majority of the cases, this advice is dead wrong, and I think that it might be because not all companies offer VA loans, and some loan officers are not familiar with some of the technical details for how these loans are done behind the scenes. Long story short, it's a benefit that you should absolutely look at. Most of the time it's going to be in your benefit, but you want to work with a loan officer in a company that has a lot of experience with these loans. All right, number one, the first benefit of VA financing that a lot of people know about is the fact that you are not required to make a down payment. Now, the logic of not making a down payment on your home purchase, I think, is best left up to doing some math. If you can achieve the monthly payment that you're looking for at the purchase price that you're looking at while not making a down payment, you can argue that any savings that you do have, you can put into the home in the form of home improvements, or you can pay off debt. I think that having the flexibility of choosing whether to make a down payment is a really huge advantage. All right, next up, not a lot of people talk about this, but on a conventional loan, let's say on a given day, the conventional loan rate is 4.25%. What you're going to find on the VA side is that the interest rate is almost always going to be about half a percentage point cheaper, which helps you to have a much lower monthly payment. Next up, this is maybe the biggest benefit. You don't have to pay PMI. So on a conventional loan, if you're putting less than 20% down, or if you take an FHA loan, you've got to pay what can sometimes be pretty expensive private mortgage insurance, which drives your monthly payment up. In the case of a VA loan, the way that they get around charging the VA borrower a monthly fee is they charge what's called a funding fee. Now, the funding fee ranges depending on certain characteristics, but it's generally speaking going to be between 2.15% and 3.3% of your overall purchase price. It's useful to know that it's there. I think it makes sense to factor that into your calculations and to understand that that fee is going to be there. But I would argue that it allows you to have the lowest monthly payment possible. The other thing to keep in mind is if you have a VA recognized service-related disability, they are actually going to waive this fee entirely, which will make the program just that much more attractive. Okay, there are some cases where the VA program you're going to find is maybe not your best choice. One, the VA appraisal is, let's say, a little nitpicky. The VA appraiser is required to go through the property with a fine-tooth comb and identify things that are not desirable about the condition of the property. So the VA appraiser may say, in order for you to close on this place, you have to have the seller correct some flaking paint, install a handrail, remediate some old termite damage, etc. So if you're looking at a property that has some dents and dings, sometimes the VA program is not going to be your best bet on that. The other case where a conventional loan might actually make more sense is, let's say you did plan on making a 20% or greater down payment, and let's say that you do not have a VA recognized service-related disability. The funding fee at that point in time of 2.15% to 3.3% can be a negative to the program. If you're putting 20% down on a conventional loan, you're qualifying for a good rate. You may at that point make the judgment call that you want to avoid that funding fee and actually choose an FHA program. The last area where I'd say that VA mortgages fall a little bit short is with condos. There are very few condo projects out there that are actually approved by the VA. So it's important, if you're looking at a condo, that you let your lender know any particular condo that you're planning to look at, because they're going to check against a list of approved condos through the VA to make sure that you can use your benefit on that property. All right, if you have any questions about the VA loan or any other mortgage options, feel free to give me a call or text at this number. Thank you so much for watching.